Globalization is a multifaceted concept that refers to the increasing interconnectedness of people, cultures, companies, economies, and governments around the globe, made possible by the advancements in technology, deregulation, capital mobility, and liberalization of financial services. Globalized banking allows banks to tap into new markets, diversify their revenue streams, and access a broader customer base. It also allows the flow of capital across borders, contributing to economic growth and development. The journey of globalization started in the 19th century with the International Gold Standard establishing a stable currency exchange rate. However, globalized banking gained momentum after the end of the Bretton Woods system, which saw the transition from fixed to floating exchange rates and the gradual removal of capital controls by national governments. Deregulation and liberalization in the 1980s and 1990s led to the innovations in financial services and the expansion of global banking giants. Technological advancement in the 1990s and 2000s played a key role by allowing instant communication and transactions globally. However, financial crises like the 1997 Asian financial crisis and the 2008 global financial crisis prompted calls for stricter regulations. Therefore, banks are now more cautious about cross-border lending, focusing on risk management. To make this complex cross-border way of banking work, some fundamental principles provide guidelines that govern the conduct, objectives, and decision-making process within the industry. While these principles can vary depending on specific frameworks and institutions, they often include a few key aspects. The first is the emphasis on responsible banking practices that contribute positively to society and do not harm the environment or communities. It includes ethical lending, investment practices, and avoiding financing harmful industries. Secondly, is the prioritization of transparency and accountability. This requires financial institutions to be open about their activities and held accountable for their positive and negative impacts. Another important aspect within globalized banking is compliance with regulations. There are a range of national and international regulatory requirements concerning banking and finance on a global scale, and adhering to them is fundamental to ensure that stability and integrity of the financial system. To help us avoid major financial crises like in 1997 and 2008 and protects against financial crimes. Finally, effective governance structures and a culture of responsible banking are essential. This includes clear accountability, risk management practices, and the commitment to ethical behavior and compliance with regulations. So, what are some of the positive impacts that the globalization of banking has had? Firstly, the presence of international banks can increase competition in local markets, leading to innovation which has expanded and improved services for consumers. Globalization has also allowed for the flow of capital across borders, which makes it easy for countries to access foreign investments. This influx of capital can spur economic growth, support infrastructure projects, and foster development. The integration of financial markets has been accelerated by technological advancements, such as digital platforms and blockchain. Finally, International banking can contribute to financial stability by enabling risk sharing and diversification. By spreading investments across different markets, financial institutions can mitigate the impact of domestic economic shocks. However, globalized banking isn't without its challenges and concerns. Firstly, while international banking increases local market competition, it can also pressure local banks and financial institutions to make costly adaptations to compete. Additionally, while globalization can expand access to financial services, it may also raise concerns about the availability and cost of service for small and medium enterprises or SMEs and lower-income households. Globalized banking also raises its fair share of regulatory challenges, as it is hard to govern financial activities that span multiple jurisdictions. This can be seen in part as globalized banking saw significant structural changes after the 2008 financial crisis, with a shift towards a more regional focus and a greater variety of players in the financial sector. Finally, globalization can affect inflation rates and complicate the role of central banks in supporting financial stability. Effective regulation of the international banking system is essential for financial stability, sustainable economic growth, consumer protection, and the resilience of financial institutions. Key aspects of regulation include setting international standards by bodies like the Basel Committee and promoting cooperation among countries. Regulation harmonizes rules across jurisdictions, reducing compliance complexity for global banks. It aims to reduce systemic risk by restructuring banks, enhancing tax transparency, and strengthening the capital requirements. Regulations also safeguard consumers through fair practices, transparency, and deposit safety. In crisis, regulations provide a framework for resolving failing banks, preventing negative impacts on the wider economy. Now that we have explored digital banking and globalized banking and finance, it is time to take a look at an emerging development in the industry. Head into the next episode, where I will be setting you a task to research this new development.